And we're live.
All right, so this is health and welfare. It is still April 10th, and we are picking up on H482, a bill that we have looked at previously that's come to us from the House. And we have with us a number of folks, but Emily Brown from DFR here. Why don't you introduce yourself for the record and like your testimony? That's great.
Thank you. So for the record, Emily Brown, I'm the Deputy Commissioner of Insurance for Department of Financial Regulation. I'm here to testify in support of H482. I'll just give a little bit of background about DFR's role and why we are therefore in support of this bill. So DFR is the primary and sole financial regulator of insurance companies who are domesticated in Vermont. In this instance, this bill is talking about a domestic health insurance company, which we have one of in the state that offers major medical insurance, and that's Blue Cross Blue Shield of Vermont. Right now, the solvency and the financial condition of our one domestic health insurer is at a point where there is definitely a risk if we do not take steps to financially support or provide a degree of financial support to this insurance company. There are only two insurance companies that offer major medical coverage on our exchange in the state. So it's really integral that, especially since we are the primary regulator of Blue Cross, that we like I said, take any steps we can to make sure that they're able to continue offering coverage in the state. So what this bill does is it, if a domestic health insurer faces an acute and immediate risk threat to solvency, and that's defined as an RBC that is 150% or below.
And RBC is
risk-based capital. So RBC is a way that insurance regulators can measure a company's financial health. Blue Cross Blue Shield Vermont currently has an order on the books from the department that their RBC should be at a minimum of 590%. Right now, at the year end 2024, they were slightly above 200%. So definitely not close to where they should be for their overall financial health, but then definitely trending towards a space where they could be at risk of insolvency. So we want to make sure that we're, again, like I said, doing anything we can to make sure that they are able to continue offering health insurance in the state. So this would allow the Green Mountain Care Board, in consultation with the Commissioner of DFR, to adjust hospitals' reimbursement rates, and the hospitals that would be subject to the reimbursement rates adjustment is hospitals that have more than 135 days cash on hand and meet other financial metrics, which I believe deem the hospital to be financially healthy. So this would allow the Green Mountain Care Board to go to those hospitals, adjust the reimbursement rates specifically for Blue Cross Blue Shield to allow them to hopefully increase their RBC to a point where it's, again, that they're able to continue operating. And I'm happy to take any questions.
so questions committee. Maybe you talk. Yeah, it's a little scary, isn't it?
Yes,
I know.
yeah.
We've been afraid of this for as we've been looking at our legislation in here. We don't want any hospital to fail, but we certainly can't have our largest insurer fail. Can you talk a little bit about how RBC is determined, just to help us understand the process you go through with that?
So I'm not a financial expert, so I don't claim to understand.
We are not either.
Yes, but
Except for Senator Combs.
so a large part of the calculation is the amount of surplus that the company has.
Okay.
And that is then kind of a marker of, and that goes into determining what the risk-based capital number is. So the more covered lives you have, the more risk you take on as a company, the more money you need in surplus to support paying claims for those policy holders or subscribers. So as you cover more lives or offer more services, you then need to increase your surplus to then have the financial backing to pay that promise in a future time.
Yeah, this is based on like all insurance. If we have another COVID outbreak or measles or polio shows up here again, and you have a large influx of claims, that you have the money to pay those claims.
Correct.
And it's security for the policy holders.
Right.
And after that, I have a feeling it gets to actuarial standards, and that's beyond my pay grade.
Yeah. And I just want to mention RBC is it's a universal or national standard that's used by all insurance regulators throughout the country. So what that does is it gives other states the ability to trust that an insurance department is analyzing a company's solvency or their RBC in a way that's uniform, so that they can trust that when that company wants to go operate in their state, that they're financially solvent and able to do so.
Yeah. Financial institutions operate on trust. If you don't trust your insurance company to pay your claims, you don't trust your bank to be able to return your money when you want it,
Right.
then we have serious financial consequences. Yes. People won't get insurance if it runs on banks.
And I do want to just circle back to what I said at the beginning about we really only have one domestic health insurer in this state and two operating in our exchange. There's no other company that is waiting to come in and take Blue Cross's place if they do go insolvent. So all the more reason to make sure that they don't end up in that place and that we're able to sustain our market. I mean, a huge swath of Vermont's population relies on Blue Cross, not only in the qualified health plan market, but also for their services. I know the state has a plan that's administered by Blue Cross, and VHI, the teachers plan, is also administered by Blue Cross. So they play an integral and really central role in making sure that all of our hospitals and providers are paid for the services that they're providing. So I really just want to stress how important it is that we make sure that they're able to continue to play that role.
Like this.
Yeah.
Any other questions? You're good? Okay. So, and if you're available, are you going to be able to stay here?
Yeah.
That would be great. Yeah, we always need to phone a friend.
Okay.
Or we do from time to time at least. Don, thank you for being here. And I think before we ask you to introduce yourself, we'll introduce ourselves because they're members of the committee you may not know.
Senator Larry Hart, Holmes County. We met.
Sam Niles from Orleans County.
Just to meet you.
It's good to meet you.
Jenny Lyons.
Martina LaRock, you look out in Burlington and represent Chimpton Central.
Nice to meet you. Thanks.
Thank you for being here, and we greatly appreciate it. And I think it demonstrates the sort of the crisis that we're all facing, not just with Blue Cross and Blue Shield, but with our hospitals and our healthcare service delivery system across the state. So I really appreciate your taking the time to meet with us.
Of course, I'm happy to be here, and I thank you for inviting me to testify on the bill. And perhaps I should state my name for the record. I always leave that out.
Yes.
As I do come here. Don George, President and CEO of Blue Cross Blue Shield Program. So again, thank you for having me today. At the onset, I just want to say, during really what like and many others have said, is a crisis in Vermont's healthcare system. I very much appreciate all the work being done by the legislature, specifically your committee, certainly the Green Mountain Care Board, who we've worked very closely with, and the many departments within the administration, certainly Emily's area, the Department of Financial Regulation. And thank you for the support that you're providing to the healthcare system, the support that you are providing to Blue Cross Blue Shield of Vermont to help and guide us to navigate, really these unprecedented financial challenges. By unprecedented, I say I've lived and worked in Vermont for 45 years in healthcare for the most part. And I've just never seen anything remotely close to what we're going through now. You might recall that in a letter that I wrote to you in January, I was candid about, as others were, that we have a Vermont healthcare system that is truly in crisis, and that we have a cost issue and a cost surge that has been ongoing and unrelenting for now a period of years. And I was also pretty transparent and open about the impacts this was having on Blue Cross Blue Shield of Vermont and its finances, as I have been publicly as well. And because I feel like I owe it to you at the onset of my testimony, I'll just recap and update you on these impacts so you have the benefit of that. As Emily related, we finished last year with an RBC of 214%. So how we're getting there is we year over year for the past 3 or 4 years, the cost of care provided health plans for Blue Cross Blue Shield Vermont members is going up by 17% per year. And if you go back previous to that period of 4 years ago, we have a period of time in which it averaged 5. At the time, we would have liked that to have been lower, but it just differentiate what we have seen here in the last 3 to 4 years. I realize that RBC is awkward jargon. So that equates to at year end for Blue Cross of Vermont, we had we lost $65 million last year in the claim surge. And at year end, we had $58 million in member reserves. Now, I just, in addition to Emily's really good explanation of RBC, I would just add to that generally the way I think about it is we need to have more member reserves for those people to be fully insured. We have significantly less we need for self-funded large customers like the University of Vermont and the state of Vermont, VHI, the teachers. We need significantly less member reserves because they are funding their own claims. What we're speaking of here is our most vulnerable populations and ability to be able to pay. It is small businesses. We've insured 2,000 of them, average size of 8 employees across the individual purchasers. By far, the lion's share of the member reserves at $58 million is to secure them no matter what. Now, I would add that of the $58 million we had at year end, unfortunately, more than half of it, $30 million, is in the form of a surplus note that was issued to us by our affiliate, Blue Cross Blue Shield of Michigan, halfway through the year because we were seeing claims escalating in such a way. We are now paying an 8% interest on that. So it might strike you that 8% in today's market seems high. Consider that Blue Cross Blue Shield of Michigan not simply just infuse money into Blue Cross of Vermont across state lines. Their regulator would never allow that. They can loan us money, but we need to go out and use an independent party to survey the market and to come back and say, well, the best rate you could get for a company that has an AM Best rating of C++, that's Blue Cross of Vermont, operating in a healthcare environment that has costs going up by 17% per year, the best rate you're going to get is 8%. So for both on behalf of Michigan and Vermont, we wish that there was a different way, but there is nothing other than, perhaps Blue Cross Blue Shield sliding into insolvency than that. H482 is a Vermont solution. That had we had that in place, we wouldn't be paying the 8% interest today. Be that as may, to put 2024 in perspective, consider that at year end 2021, Blue Cross of Vermont's risk-based capital ratio was over 600%, 607%. So in the bottom of the range that the Department of Financial Regulation correctly mandates that we should have in order to protect consumers. So and that equates to $136 million. So consider over a 3-year period, because of the surge that's going on and the claim costs that we have in the state, Blue Cross Blue Shield of Vermont's member reserves were depleted by $107 million. So as of now, our non-surplus reserves have dropped from 136 million to 28.4 million in a period of 3 years. Within the industry, broadly speaking, that is an unfathomable drop. And so when you say that the Vermont healthcare system is in crisis, that's the perspective that I bring from it. Now, as we move forward to make the much needed changes in a healthcare system together, I could put these into two broad, what I would call parallel categories going forward. The first is an immediate need to be able to safeguard the near-term finances of the system for the benefits of those people I spoke of that are fully insured. That and H482, I think, is in that category. Secondly, we are making and we need to continue to address our larger system problems and cost containment. So two parallel tracks. The provisions of 482, specifically this emergency authority and Vermont Care Board to be able to act, are not only appropriate to Vermont's system today, but I mean they are essential, an essential safeguard, not only for the members of Blue Cross serves, but the providers that we pay on a weekly basis in the entire healthcare system. When Blue Cross issues a policy to our members, I very much relate to what Senator Cummings says. This operates on trust. When we issue a policy at the beginning of January, it is a rock solid, unequivocal promise to pay, no matter the pandemic, no matter the flu season, no matter the cost surge that's going on in Vermont. It just absolutely has to be that way on behalf of our members. Yet, unlike the hospital budget process historically, where hospitals could come in for a mid-year rate adjustment, that's not the way these promises to pay are. They're a projection of what the claim cost is going to be in the future. Maybe it represents the surge, maybe it doesn't. But there can be no mid-year rate increase for those small businesses and those individuals. They're getting a big enough rate increase as it is today. So I also, in addition to that member obligation, it's important, and I think you all realize how much Blue Cross Blue Shield is important to just the functioning of our healthcare economy. I mean, we pay out $35 million in claims per week. And that is a multiple that is greater than either Medicare or Medicaid. So our member reserves are essential to assuring those claims are paid every single week. But it's also, as Emily noted, it's important even to our largest health system. Of that 35 million, we pay out over $10 million every week to the University of Vermont Medical Center, and but also to other hospitals throughout the state. But consider our federally qualified health centers. There are independent physicians throughout the state, ancillary providers, definitely. We know during the pandemic, we forwarded them money because they need it every single week to be able to continue to function. Now, I just wanted to also comment on, there's a trigger that Emily mentioned. It's what's called, once again, awkward jargon, the regulatory action level. It's 150% of RBC. So that equates for Blue Cross to just over $40 million. So if you think about it, that's a pretty low level. We're saying we would only invoke the provision of H482 if Blue Cross had slightly more in reserves than 1 week of claims that we pay. So even I think it gives you a perspective on $136 million, which puts us in our range. It's still, that's a month of being able to pay claims. So it's not like the department or their mandated range or Blue Cross in its reserves are over accumulated. I also just wanted to share a perspective on the recent settlement agreement between UVMHN and the Green Mountain Care Board and relate it back to H482. We were supportive, Blue Cross of Vermont, of the settlement agreement. We do think it is an important first step. I would put it into the category of those things that are addressing our larger system problems. And when I say that, I relate it to H482. There really isn't anything in that agreement that would assure us of the near-term financing of the system. It's nothing in there that would assure us that we're not going to that the claim surge isn't going to continue, or if it dies down, it won't flare up again in 2026. So there's nothing there that safeguards the near-term financing of the system like H482 does. The thing that what I would relate about those two together is H482 and the Green Mountain Care Board Agreement, for different reasons, are both mutually essential for Vermonters. They both for different reasons. Also, I mentioned the surplus note. I think most people I've talked with agree that it wouldn't be feasible or fiscally responsible to think about taking out another surplus note in 2026. I related just the sheer weight of the debt. At some point in time, it becomes Vermont debt, it becomes Blue Cross Vermont debt. So this is a Vermont solution, and that's what I'm advocating for, and I think what we need. It would be very fair for you to ask, what's Blue Cross Blue Shield of Vermont yourselves within for your 450 employees doing to respond to this situation?
I
And
was gonna ask that.
yeah.
Yes.
So we have developed a very comprehensive recovery plan, financial recovery, near term and long term. Certainly, it goes to the Blue Cross Vermont Board. It goes to the Department of Financial Regulation. We meet with them frequently to assess where we are with that. And we're obligated to work with them and happy to do that in the circumstance. Some of the things that are in there, first, I would say, Blue Cross Blue Shield of Vermont's admin expenses, a percent of premium is 6%. So when we pay out benefits, it's 94% coverage for our members, 6% administrative costs for Blue Cross Blue Shield of Vermont. In a recent rate order from the Green Mountain Care Board, they noted from their actuaries, Lewis and Ellis, who had surveyed the marketplace, that Blue Cross Blue Shield of Vermont's administrative expense, the 6%, ranks in the 4th percentile among all health plans similar sized across the country. So what does that mean, 4%? It means our administrative expense is lower than 95 or 96% of plans that are our size. So, we've always been mindful of that. So, what I say to Blue Cross employees is, we're not going to reverse over $100 million in diminishment of member reserves on the 6%, but we absolutely have to do our part. It's part of just being credible with when we're asking for help. So, on a administrative budget of less than $100 million to provide for $1.5 billion a year in claim payments, we eliminated from, June on of last year, $3 million was frozen. We currently have 29 positions out of 430 that are frozen. As positions come up, they are evaluated and very few get posted. So we have employees doing, double duty right now. A couple of other things that have contributed to this is that, while our affiliation with Blue Cross Blue Shield of Michigan as part of a long-term strategy to acquire technology and other capabilities without having to pay for it or build it ourselves, and this millions of dollars in value that's beginning to flow. Last year, understanding that we were trending in this dire state, we reprioritized the work we were doing with them for what we call quick financial wins, consolidate many of our corporate insurances with theirs, consolidate our vendor contracts, and that resulted in $24 million of savings for Blue Cross Blue Shield of Vermont in a single year. If I look back and consider we ended the year with only $28 million in non-surplus related capital, I mean, how important was that reprioritization and the work that we've done for Michigan? Finally, and I wanted to address our Medicare Advantage product, Vermont Blue Advantage. We entered that marketplace to part of our commitment to serve all market for Vermonters, and we have been asked by many Vermonter seniors to be able to have that market. We did that with Blue Cross Blue Shield of Michigan actually before our affiliation and partnership with them. And in doing that, we're allowed at the Blue Cross Association to do these partnerships and to share risk, unlike our fully insured products for small businesses and individuals. And in doing that, Michigan was taking 51% of the risk and Blue Cross about 49%. We went to them and said, we simply cannot continue to put any more reserves into Medicare Advantage. And what they did for us was our risk position got lowered from 49% down to 9%. They infused $80 million into the Medicare Advantage product. to buy out that from Blue Cross of Vermont and make sure that it had its proper member reserves going into this year. So an incredible show of support for Michigan. And what we were saying here, what I'm saying to you is that was a decision to get all in on the all important small business, individual marketplace, our other, small, large employers who are fully insured. That's where we feel like we have to put the emphasis and recovery. Finally, I would say relative to our own plan, once again, we're working very closely with Emily and her team. We're continuing to review any decisions that we make, and all options are continuing to be on the table for that recovery plan. Finally, just some closing thoughts for us. I would not be here if it were not for, and advocating if it were not for, I truly believe Vermont's healthcare system is in crisis. It's faced with a cost crisis. It's becoming it's an economic issue for folks. And well, I hope that we never trigger the provision of H482. I hope those larger system solutions get there in time. I just don't think we can be insured. This is no time to gamble with the lives of people. This bill ensures the three-man care board will be able to act in an emergency circumstance that would be truly very dire. Will it help Blue Cross of Vermont? Of course it will. But this is, from my perspective, this is to protect Vermonters' healthcare coverage and, most importantly, their continuity of care throughout 2026. So I actually am calling on all of us within the healthcare system, all the healthcare stakeholders, sign on and endorse this provision. What this is saying is we're all in it together. I mean, we're willing in an extreme circumstance to turn to the leadership of the Green Mountain Care Board and have them reallocate some monies so that we can protect Vermonters, their continued coverage, their benefits flow, their continuity of care, and for those providers that are outside of major systems, continue to pay them throughout the year. So finally, I again just want to say, it's in crises like this when I was once told leadership really matters. So I certainly thank your chair, but all of you for your leadership and what you're doing to address these larger structural issues. It is imperative, and I appreciate it very much. And I endorse and ask that you pass H482.
Thank you. I know we have your draft online, and if you have any of the written comments that you can share with us, that would be great as well.
Okay.
Yeah, terrific. And again, it's very helpful. It puts it in perspective. We are you were definitely an emergency, and the rest of it's an emergency as a result. But appreciate your comments. Questions for George? Question.
He answered my question, so.
Yeah. Thorough. Thank you. This is terrific. And right. Well, so we may be in touch again, and we have Sarah here who is really very helpful. So,
Happy to come back.
all right. Thank you. All right. You are up,
Thanks.
and you've been here before, so no need for further introduction.
Good morning, Madam Chair, committee members. For the record, my name is Mike Del Trecco. I'm the president and CEO of the Vermont Association of Hospitals and Health Systems. So first of all, thanks for the opportunity for having me here today. I too, like the others, want to acknowledge the deep challenges this committee, the Green Mountain Care Board, the entire delivery system, and maybe most importantly, that Vermonters are managing. The circumstances are untenable, deeply concerning, and simply put, the thought of Blue Cross Blue Shield of Vermont not being available for Vermonters is very problematic. Unfortunately, we have another equally challenging concern, that our hospitals are facing deep financial challenges and situations. Those coupled with the federal headwinds that we're managing related to Medicaid cuts, marketplace pressures that we're seeing, how volatile that is over the last week, supply chain issues, really challenging. So when I testified on this bill in the House 3 weeks ago, it was introduced to me as we were in a critical juncture of a decision and a negotiation happening between the Green Mountain Care Board and the University of Vermont Health Network. And the goal, as it was described, was to move forward the negotiations in that discussion. That agreement was accepted, ratified a week ago. So it's a little unclear to me the need for the bill as outlined and described. Having this as a permanent tool, I think creates some unintended consequences. One of which is it further jeopardizes and puts hospitals potentially dangerously close to financial pressures below the 135 days cash on hand. The second thing, it creates a disincentive potentially to be sustainable beyond that 185 days. These organizations have deep community missions, and how could those fundings used to be able to support those efforts would be a consideration. The other thing in that space, I think we really need to come back to is how do we manage some of the affordability and sustainability conversations. I think this jeopardizes some of that as well. So unfortunately, for some of those reasons, VAHS and our members oppose this. We don't oppose working together to support efforts to solve problems. And I actually have spoken to Don offline 2 or 3 or 4 times to say, how can we do some things together? And we're supportive of that work, as well as Blue Cross Blue Shield. To me, it's just too risky to deplete reserves below 135 days. Like RBC, hospitals have ranges of days cash on hand. We don't have a national standard of RBC. Standard & Poor's is a organization that looks at days cash on hand among other ratios to sort of evaluate the financial stability of an organization. So S&P defines 135 days as adequate. In the marketplace, what we're seeing today, last week, for example, hospitals lost 5, 10, 15 days of cash on hand because of the market, putting us to already the 125 day threshold because of market pressures. I don't see it. It's unclear whether we'll get back to February markets or not. So I think that's something to deeply consider. The fact of the matter that this is adequate, which is not very adequate, to my point. So rate cuts of this nature lack predictability. They impact planning. They destabilize operations by challenging the revenues necessary to cover demanding and increasing operating expenses. By way of example, post-pandemic, I think this is what we're seeing. We've seen operating expenses grow significantly in our workforce. But the other thing that we've seen is a growth in our utilization that we haven't seen in the past. Yeah. We've seen 22% growth in our outpatient services post-pandemic. We've seen a 10% increase in our length of stay, driven by a 4% in acuity, driving all of these challenges. And we are seeing more people at a higher frequency.
Quick question on the increased utilization, and I failed to ask it of Don George. Maybe Sarah, you can help with that at some point, but you're seeing an increased utilization by outpatients. And maybe you can't answer this, whether anyone can, but how does that relate to our loss of primary care and our downturn in primary care access?
Yeah, I think even with these increases, I'd answer that by saying the access pressures are still real. So the vulnerability of our hospitals closing, like I don't want to see a hospital or Blue Cross Blue Shield closed for all the reasons we're talking about here. I do think that primary care has an impact on those services. I applaud some of the decision making in the agreement last week to fund primary care outside of hospitals by that $11 million. So that it's
Well,
very
I'll speak to
beneficial.
that, right?
Right.
Thank you.
So So I'm very cautious in this space. That's why I oppose. I don't oppose working together or coming together. I'm just very cautious. Like, how do we work through these issues and understand the implications? Financial ratios are static. They don't take into account external environmental things that are happening in real time. So that's a concern. In section 2, the appointment of an independent observer, I have some comments and thoughts about that, and I don't think this is necessary. So it's unclear what material misrepresentations and non-compliance means or is defined as. Every time the hospital submits a budget or materials to the Green Mountain Care Board, they do so under oath. So what does misrepresentation mean in that space? We also believe the Green Mountain Care Board has current authority at any time to ask the hospital a clarifying question, and they do so. And by way of example, just 2 or 3 weeks ago, they submitted 5 letters to 5 hospitals that have financial challenges. And basically, in shorthand, it was, let's look at your operations, let's understand your financial challenges. Is there an opportunity to improve and discuss those concerns? And then finally, I think as we've all talked about, how do we do this work together? I think it sets up an unnecessary process. I think could be very costly. We see that at University of Vermont Medical Center, that it's a $15 million possible price tag for consultants and the observer. They don't know where the cost of the observer is. And I don't know what the cost of those consultants would be in other organizations. And then something that I deeply want to avoid is creating a potentially adversarial process. So how do we move forward? How do we continue to build this trust that we're launching? I mean, trust is done by good work, doing good work together, and moving forward. So this uncertainty has the potential of perpetuating and destabilizing where we're at today. There's so much more detail on the financial piece that I'm not going into that my colleague Jim Fox is going to speak to. I'm happy to answer questions. And again, I appreciate the deep concern and crisis that we're managing, and we're feeling it throughout the delivery system. And I want to emphasize that first and foremost, our hospitals are there every day to deliver care to people that need it. We don't corral people to show up. They show up, and it's impacting every aspect of our delivery system, from access challenges to workforce challenges to challenges at our insurance companies. So again, thanks for the time here today, and I'm certainly happy to answer and go deeper into any area.
Who went first? One, okay, Douglas, Cummings, Buick.
I might have 2.
Yeah, no,
Can
go ahead.
you give some examples of areas where laws or its member hospitals have been having that good faith cooperation with the insurers?
Yeah, sure. So, I know that I've reached out personally to Don to say, what are some areas of work that we can explore to help solve some of these problems? An example might be creating a pilot on reference-based pricing. How does that create a win-win situation, not harm our hospitals and help the insurer at the same time, and balance that out in a way that we can move this forward? I think S126 is a platform for that work. So that's an example of how we're looking and reaching out. So in that spirit, Blue Cross Blue Shield and my team are meeting and looking at some of this data. Basically, I want to understand, hey, if we pull certain levers, what's the outcome? How does it help? And I know that the backdrop to this, a lot of this is utilization. There's cost there's many components of cost, but simply the price we charge, how many times we charge for that, the utilization, and we're seeing that grow exponentially. And then we're also seeing higher acuity. And coming out of the pandemic, we have even the actuaries had no idea how to predict what this pent-up demand was going to look like. So we all sort of reverted back to 2019, and I'm not an actuary, and we adjusted and they moved forward, and the predictability of that, as we're seeing, is not happening the way we thought of it. So those are a couple of examples. I know internally our organizations are doing many of the same things that Don George described. They're looking at hiring freezes. They're looking at what is the staff's role? What can we share staff? We have many organizations that are joining. For example, there's the New England Collaborative between hospitals, looking at how we save money on supply costs. There's a relationship between North Country Hospital and NVRH, Northeastern Regional Vermont Medical Center in St. Johnsbury. How do they share services? So there's a lot of activity in that space going on. I would also include, I believe Act 167 is promising. It's probably not as fast as some of the urgency that we're talking about here today. And all 14 hospitals have signed up for that work and are working with the Rural Health Redesign Center to evaluate what those opportunities are. So we're engaged, and I can tell you, from my point of view, when I share this with my colleagues around the country, like, we are leading and leaning in on how do we make these changes. And I can tell you, me, Devin, and my entire team are suggesting things that we would have never suggested in the past.
Does your collaboration involve the working between UVM and Blue Cross that we've been seeing in the news?
No, it does not.
And my second question, Joe,
Yeah, okay.
would the loss of Blue Cross Blue Shield be able to be disastrous to the hospitals?
I think the loss of Blue Cross Blue Shield would be complicated and catastrophic in many ways, first and foremost to Vermonters.
So it's in the best interest of the hospitals to ensure that Blue Cross Blue Shield is robust and strong.
Of course, we need strong insurance.
Obvious questions, but I thought.
No, I appreciate it. Thank you.
No, I think I was going, or Sam was going, is understanding where the objection is coming from, because if Blue Cross Blue Shield goes down, they are our insurer. I mean, there's a few fringes.
Yeah.
We've got federal concerns about, Medicare and Medicaid. And so we've been trying to find a way to keep Blue Cross afloat. What we've heard is your members are all in various shades of pink, maybe gray, but pink seems to be down to getting towards red. We have one who's black, significantly in the black, and they have significantly high rates. We've been told the highest rates in the country. And there seems to be some question about, because this isn't just a 1 year thing, a question about why that's happening. And so we've got an agreement this year. We're going to fail Blue Cross out, but there's next year. And I think this is an effort to say, if this keeps, we need to know why this is happening. I'm sorry, but you aren't the best hospital in the country. And we understand we've all got, we're aging. For some reason, utilization's going up. We can't all because of age, because Medicare can't stand it something. And I guess the argument is, well, we fixed this year, and I could see where there might be a concern in the future that somebody might go after one of your members. And but I think you'd also welcome being in the position where somebody might go after you, where you are significantly in black.
Sure.
And I guess the question is, do we just say, okay, we fixed it this year, but we're not going to put a tool in place that if this continues, that the Green Mountain Care Board has the ability to intervene. It makes me very uncomfortable. I mean, considering the price of health insurance right now, to think I'm paying this, I've been told $44,000 for a family plan on the exchange. I'm paying all of this plus out of pocket. And so I think, but I'm not sure my insurer is going to be there to pay my bill. We're trying to find a way to put some stability in there. And I think we understand that the other hospitals are fighting for their lives. That's national.
Right.
Our small rural hospitals are in big trouble. The thought that you might have to drive 50 miles or 60 miles to find an emergency is frightening. And so we want to keep you alive, but part of keeping you alive is keeping Blue Cross alive. And I think, we're trying to have a hammer in place in case persuasion doesn't work. Either you're going to work with us or, and you hope you never need it.
Right.
And I don't think anyone's looking at the BOS members and say,
Right.
we don't think you're working with us. We don't think we think you are really trying to stay up.
Right.
Yeah.
So a couple of comments, or thoughts. There's a lot there to unpack. The color of the pink or shades of gray. So in 2023, 11 of our 14 hospitals, and you can probably even argue others on the fringe, made most in the red. In 2024, we've seen some improvement. Very, modest improvement.
Full hue change.
Yeah, right. They're going to put it. I think what I point to is S-126. That's a work process to prevent. I think some of the things in that tool, in that bill are, what is the vision and the plan? So when we start pulling levers, we know what to measure, how it's going to work. We're very supportive of that. The other thing that we, in the spirit of things that I wouldn't have said before to members, in 2026, when you build your budgets, you meet the guidance that the Green Mountain Care Board has set forth, and they have the authority to make all of these changes in that moment through their orders. They can reduce our price request. They can reduce the commercial rate request, even though the guidance is set a number. And our hospitals, including the largest hospital that you were pointing out, has said they are going to do their darndest work to meet that guidance. I can tell you when I look at that guidance, one of the most difficult numbers to meet will be a 3% growth in operating expense in year to year. And just to tease that out a little bit, about 65% of our operating expense is related to our nurses and our staff, and nurses all the way to people who change operating rooms over. And many of those individuals are bargaining units, and those bargaining units are at contractual arrangements above that 3%. So to meet that 3%, knowing that you have a 65% in that bucket, and then there's 35 left, is difficult, very, very difficult cuts. And making those cuts can happen in a few ways. People. And then the second way is looking at service lines very closely and partnering where partnering can happen and making difficult decisions. I understand the interplay between, to one of your other points, Blue Cross Blue Shield and hospitals. hospitals are the only ones that deliver the care. So I'm deeply concerned if a hospital closes, as I'm deeply concerned with Blue Cross. It's a really balancing act. And I support and I move the notion that in 2026, the tools exist within the budget process to accomplish a lot of what we're talking about. And I know that my members have all stated their goals are to meet that the terms of that guidance. What that looks like in the end of the day, and based on some of the pressures that we're talking about, I'm not sure. I won't know that until July, but that's the goal.
But if you come in and you say, we've got a new collective bargaining group and the only way we can keep nurses working is a 7% increase. And we've done X, X, and Y to keep from having to have travelers and stand. I can't see the Green Mountain Care Board saying too bad.
I can't speak for the
Yeah.
Green Mountain Care Board. I can say that my experience tells me that there's not a whole lot of leniency there. There's an understanding, there's adjustments, and as I said at the onset, the chair of the Green Mountain Care Board and the entire board, they have a really hard job, and they're in a tough predicament. And just like working with Blue Cross Blue Shield, I'm trying to work with the board to say there are some things we can do. And I think a lot of this lives in S-126 and the Act 167 work, and then hospitals meeting with the terms as best as possible and guidance.
Senator Bullock has a question.
Yes.
Mostly comments. Thank you very much. I really appreciate you being here, and I know you're in a tough spot.
Thank you.
I also just want to throw my support behind this Bill 42. I think we need it. I've heard you use phrases like too risky, and I'm thinking to myself, well, what is the risk of not doing this? You know, we need to be cautious. I would counter that with we need to be courageous and bold right now. We are in a crisis, and doing the status quo is not going to serve us well. So for me, there's never been a more pressing time, and I'm talking probably across the board, to be courageous and bold, while also being thoughtful. So not being, flighty, but this gives us actually a plan, a pretty well thought out plan of what we can do. So I just wanted to push back there. I also wanted to say, I like the idea of an independent observer. And I've been troubled being in this building, often seeing how we put ourselves in these binary positions where it's this or that. It's me against you. Here, we have the opportunity to have an independent observer. And we don't have to go to fisticuffs. We can actually see it as an opportunity to grow and work together and forge relationships. So yes, it's something new, it's something different. Maybe it's a little bit scary, but there's never been a more pressing time to have this kind of oversight and this kind of, new relationship building. I also just wanted to say that you're right, hospitals are at risk. We know that. And we've been given like a very thorough report on why they're at risk and what the pressures are that are causing this risk. And we need to do something different. I love the triangle that we had in here a couple of weeks ago where we saw that hospital care, it's at the top of the triangle. So not everything happens in hospitals, just some acute, work. So we know what we need to do. And I, again, really appreciate you supporting our hospitals that, we need that and time to do something different. Thank you.
Thank you.
Thank you. And I think we need to move on to Judy Fox, and then I'll offer my comments at the end. And I'm glad that Emily came back as well. So this is good. But so thank you very much, Mike. Appreciate your taking the time. Everything that you have said is important to us. So it is this balance that we're trying to sort out with the emergency and with the longer term planning process.
Other,
But we got to move on.
no, I just have one question, not even question.
Uh-oh.
Send it back in. Other than scuttling the whole thing, what could we do to help?
Senator, can I ask you to hold that question because it's my question as well? And I'd like to wait until we hear from Judy Fox and then we'll send people away with thinking further. That would be good. Thank you, Mike. Appreciate
Thank
it.
you for the comments. Appreciate it.
Judy Fox, thank you for being here. We introduced ourselves previously, so we won't do that again. We appreciate that you're in Rutland and taking care of your hospital. And we do have your testimony here in front of us. So as I look at it, I see some similarity between what we've heard from Mike Del Treco, but if you wouldn't mind sharing with us your hospital perspective, I think that would be very helpful on 482.
Sure. Yeah. So let me. Are you getting feedback?
Nope. No, not yet.
Okay, I'm getting a little feedback here, but so good morning. I'm Judy Fox. Is it still morning? It is. So President and CEO here at Rutland Regional Medical Center. And I really want to thank you for allowing me time to offer my comments. And in particular, thank you for allowing the virtual option. It was important to my schedule today. So I just want to state just very upfront that Rutland agrees with the current situation with Blue Cross and understand dire straits and the concerns that we have as hospitals, as Vermonters.
Judy, we have a lot of noise in the room, in the hallway, and if you don't mind, if you could somehow get closer to the mic or
Okay.
turn the sound up, that would be helpful.
Is this better?
Yes, let's try that.
Okay. So I just want to state, we don't believe that the current language in H482 is effective or in the best interest of the Vermont healthcare system. But what I want to impress on you is that we also feel that we as a hospital and a network of hospitals have a duty and a right not just to offer our concerns and criticisms, but to be part of the solution. And so I'd like to explore kind of a few issues and concerns that we have with 482 and then offer where we think Rutland Regional Medical Center and other hospitals have opportunities to partner and collaborate. Is my voice okay?
You're good. It's good.
Okay. So really, I want to start with the days of cash on hand and really looking at the Green Mountain Care Board's ability to adjust hospital reimbursement rates. First and foremost, we're concerned with the 135-day threshold. And we actually have a past concern that would highlight this. So Rutland Regional Medical Center faced a breach in our financial covenants stemming from our 2022 operating loss. What that required was a covenant suspension agreement with our lender, which happened to be TD Bank, and the USDA. And as part of that agreement, we were required to maintain a minimum of 150 days of cash on hand. Without that, we would have been at risk of our outstanding debt being called, immediately payable, or a financial facilitator being placed in Rutland. So as proposed, H482 would set days of cash on hand at a level that would be below our breach requirement, and therefore really going to present some financial issues for us. We all know, and I don't have to spend much time here, we're in very turbulent economic times, tariffs, reductions in grant fundings, unknown changes in federal Medicaid programs. So really trying to balance that risk with the Blue Cross solvency risk. But we need to be very careful that we don't rest on capital from hospitals where we will then risk solvency and sustainability in some of those other hospitals. And I offer as an example of this volatility, last week, Rutland Regional Medical Center lost 18 days of cash on hand within, a handful of days due to that volatility in market. That balance sheet that we have, our days of cash, really helps us weather these types of financial situations. We didn't we had that balance sheet strength in 22, and it allowed us to work through those breach covenants. We don't know where we're headed in these sweeping tariffs and changes in costs of goods and services, but it's highly likely that hospitals are going to have significant cost pressures that weren't anticipated in our budget process. So just share with you, we're all watching that, and that is a concern. We do oppose what I would call clawback of reimbursement in H42 because we do feel we have a duty to be responsive, as I've said, and where we'd like to focus. So our RMC has proactively implemented cost savings initiatives. We had that significant loss back in 2022, and from there propelled forward with a commitment to look at our cost structure. And we were quite successful with that. What we don't want, and Mike alluded to this, is we don't want hospital rate adjustments to penalize hospitals that have exercised good financial responsibility. And this approach in H482 could serve as a disincentive for that prudent hospital management. In particular, as reported by the Green Mountain Care Board, if you look at Rutland Regional Medical Center's performance, we've had the lowest compounded annual cost growth rate, which was driven by that commitment to lower costs. And over 3 years of time, that was $10 million for our organization. If you look at that in relationship to rate increases, our commercial rate increase would have been 6% higher had we not committed to that rate and cost reduction. And this is where we think we need to provide focus. This is difficult work as you're balancing access to care, quality, staffing, but nonetheless really important. And we can do hard things. And this is something that we should all focus on. One of the most important concerns or most significant concerns that we have is, as proposed, this bill really needs to make a difference and must assure that Blue Cross solvency for Vermont is directly and measurably improved, not out-of-state plans. And I need to share with you, as we look at our Blue Cross volume here in Rutland, excluding our own self-insured plan, which is about 10% of our volume, to be honest, the Vermont Blue Cross revenue accounts for only 53% of our total Blue Cross revenue. So as proposed, based on rate setting procedures set by the Green Mountain Care Board and utilized to take back commercial rates, as was used last year in our budget review process where our rates were reduced, that mandatory hospital rate reduction is not going to impact just Vermont Blue Cross. It is going to subsidize out-of-state plans, diminishing the return to our Vermont residents and not providing full benefit to Vermont Blue Cross. And so with that, we just don't support 482 because we believe it dilutes the impact and the benefit to Vermonters and the Vermont Blue Cross plan in and of itself. Then as we consider the independent observer, while I appreciated the comments earlier, we tend to see it a bit differently here. So hospitals rely on lenders and bond markets to secure capital for things that we need to do to keep our facilities up to date and safe and efficient, whether that's infrastructure, technology, any long-term sustainability. And to do that, we rely on debt markets. But with that comes fairly stiff and stringent financial covenants that govern how we need to perform with our debt lenders. They're set by the bondholders, and we talked about the promise and the commitment. It is our commitment to our lenders to maintain adequate reserves, operational performance, and financial stability. If we fall out, like in 2022, of compliance with bond covenants, then our lenders have the ability to appoint what they call a financial facilitator to access the hospital's financial position and actually recommend corrective actions. And this is steeped in our bond agreements and our financing agreements with our lending agencies. This in and of itself provides what I would consider to be kind of a redundant position and could present conflicts if the Green Mountain Care Board decides an independent observer is needed, and hospitals would fall into this concern for breach. Moreover, the independent observer's primary role is to ensure that the Green Mountain Care Board has information that's pertinent, relevant, up-to-date in their oversight of hospitals. As Rutland Regional Medical Center sits today, I'm really proud of how we interact with the Green Mountain Care Board, and we have a long history of providing all the information that they need as part of the budget process. We take great pride in that, and honestly, last year our budget process was really, happened over a number of months, a lot longer than it had in past years. We as a team here, a finance team, our CFO, committed more than 600 hours in putting together data for the Green Mountain Care Board. That data was required as our initial budget was submitted, but also subsequent data requests, which we fulfilled. Additionally, over and above the budget process, hospitals are also required to submit monthly data to the Green Mountain Care Board. This data is meant to disclose or explain any variances between budgets and monthly hospital performance. And so the Green Mountain Care Board has the opportunity each month to review our submission and ask for additional clarification. We haven't denied the Green Mountain Care Board their request, and therefore really don't see the value of this overseer. I believe,
Judy, what I'm going to ask is that we do have your testimony in writing. So if you can give us kind of the global comments, because I see many of them resonate with what we've heard from Mike Del Treco. If you could give us a sort of the summary of the rest of the testimony that is in front of us and you, that would be very helpful. We're under some time constraints today, with apologies.
Yeah, no problem. So just to summarize, the independent observer, we feel there are mechanisms in place right now with mandatory reporting, whether it be related to monthly performance or budgets, that already would fulfill the value and the need for an independent observer. I also believe that it could triangulate and just put another party in between hospitals and state agencies. And what we really need is to work very directly together. And so to that end, and to offer solutions and to engage and support solutions, we'd like to really be able to engage with the Senate Health Bill S-126. Where we think there is some value is, quite frankly, to look at reference-based pricing and pilots that would limit our risk and reward, if you will, to Blue Cross Vermont, where we can align savings without putting hospitals at risk, or by funneling money to out-of-state plans that would not impact Blue Cross Vermont. So we'd really like the opportunity to work with our partners at the state, Green Mountain Care Board, AHS, you as a legislative body, to look at ways in which we could design and to be different and creative and not just do the same things we've done, but to design a payment model that would balance that risk between hospitals, insurers, and quite frankly, Vermonters, and prioritize whatever that is to stay in Vermont and not advantage out-of-state Blue Cross plans. So that's where we're at. We want to be at the table. We want to be a willing partner. We want to work directly with those who are in decision-making capacity and feel that S126 really is a more viable option for us to be creative, to be different. But I will say, as hospitals and as Rutland Regional Medical Center steps out and wants to be a willing partner, particularly with reference-based pricing, it demands that we have a bit of cushion on our balance sheet and we have some days of cash that if something goes wrong, there's more risk than we may estimate, that it's not going to throw us into a significant breach with our commitment to our bondholders.
Thank you. I think we're going to have to wrap up our this part of our testimony and our meeting on 482. But I'm going to, I think Senator Cummings and I are thinking similarly, and that is we've heard significant disagreement about the observer and sections of 482 from the hospital perspective. And so the question is, what can we do to improve the bill so it does go forward? There are a number of folks, I have to tell you, that there's a resounding support of 482, both in the building and in our with our constituents. Having said that, I do think that we have an opportunity to put some guardrails in place to prevent some of the concerns that we're hearing from you, Judy Fox, and from you, Mike Del Trecco, from the hospitals specifically. And my question, I guess I'm looking at Emily Brown and other folks in the room, Blue Cross and Blue Shield, Emily Brown, and hospitals. Is there something that we can do that would prevent the sort of the adversarial relationship, that would improve the direct communication and provide for greater collaboration in the process? And to understand that, you know, the assumption that overlays all of this is that the hospital's at fault. There's no question about it, that our biggest hospital's at fault. That's what's in people's minds. And the reality is that there are a lot of hospitals at fault across the country. Everybody, that we're seeing this problem play out, not just with our largest hospital in having too much money, but our smaller hospitals having too little. And so are there other things that we might put into the bill that would offer some reassurance to each of us that we're doing the right thing? We don't want to go ahead and have another instance where we have unintended consequences. So what I'm asking of folks is, please help us with some language. I'm thinking about it myself. I'm gonna work with, I think, the regulators in this case and others about what we can do to offer reassurance that we're preventing the cataclysm that I'm hearing about from hospitals. We don't need that. We just don't need that ongoing problem. No question. So we'll wrap for this part of the meeting, and we are moving away from this, but you've heard our ask, and I think Senator Cummings brought it up as well. How can we fix it? Okay, how can we fix this? We'll thank you.
Yeah, well, I'm happy to work with you and offer language and our suggestions. So
that would be terrific. Greatly appreciated. Thank you. Okay. All right. So committee, we had we're all finished with 482. I mean, we're finished for today. We're not finished. Don't you worry. We're going to move on to 266. 218 we put on our agenda, hoping we could do a quick walkthrough with Katie, and we will come back to that. We might get back to it later this morning, before 12 o'clock. If not, we'll be certainly looking at it. Kiki's going to help us get it on the agenda for tomorrow. So we're moving on to 266, and we have Megan Morgan Holleran from Pharma.
Just coming in Zoom.
She's just coming into Zoom, so I'm assuming that you guys want, and then we have, oh, who is that person? Sarah. Oh, okay. Unknown. Good. And you have some money up, that's very. Good. Morgan, you are here, welcome.
Hi, Senator. Thank you for having me.
All right, so I haven't met you, but I don't think the rest of the rest of the committee, so we're gonna go around and introduce ourselves, beginning with Senator Part.
Senator Hart, Orange County.
Sam Douglas, Orleans County.
Ginny Lyons.
Martine Rocky, Chittenden Central.
Ann Cummings.
So, Morgan, thank you for being here, and just an FYI, we have you, and then we have Sarah Teachout from Blue Cross and Blue Shield, both of whom are testifying within about 15 minutes, so, you have 7 or 8 minutes of testimony, that would be helpful.
Okay,
So-
and thank you. Before I start my slideshow, I just wanted to say thank you so much for the opportunity to do this remotely. I had childcare issues this week, so I really appreciate the opportunity.
Yes, well, no, not a problem, we do this regularly, and we appreciate you being available.
Okay, can everyone see my screen?
Yes.
Great. So, good morning and thank you again. My name is Morgan Halloran, and I am the Director for State Policy with the Pharmaceutical Research and Manufacturers of America, which represents the country's leading biopharmaceutical manufacturers. Pharma opposes H.266, particularly Section 1, because it would codify a broken model of the 340B program, locking into state law a system that's increasingly exploited by PBMs, chain pharmacies, and third-party administrators. We do agree with the healthcare advocates' testimony from last week that Section 2 could be improved by following Minnesota's approach to transparency. So the original intent of the 340B program was to help vulnerable patients access life-saving medicines by supporting safety net providers. And I really want to be clear here that manufacturers support that mission and must participate in the program as a condition of participating in Medicare and Medicaid. The program is not going away, and manufacturers are not seeking to repeal it. Manufacturers will either provide a discount to 340B covered entities or rebate to the insurer. So this small safety net program has grown into the second largest federal drug program after Medicare Part D, and it's really morphed into a revenue stream for vertically integrated middlemen that are increasingly dominating this space. Today, 69% of contract pharmacy arrangements involve just 3 PBMs, and the expansion of 340B program means insurers are seeing fewer rebates, which is impacting premium rates. In fact, a recent study found 50 cents of every dollar in profits contract pharmacies receive through 340B go to just 4 PBMs and their pharmacy companies. And as drafted, the bill treats these vertically integrated contract pharmacies like nonprofit hospitals and FQHCs, the actual intended beneficiaries of the program. And this slide is just an example of the vertical integration of these PBMs with other entities in the supply chain, including the contract pharmacies. So this bill would further prohibit manufacturers' access to claims level data, making it impossible to verify whether a drug is subject to 340B discount, which on average is about 57%, or if it qualifies for a commercial rebate. And because Vermont law already prohibits the use of claims modifiers, this substantially undermines manufacturers' federally authorized audit rights and ability to ensure integrity and compliance within the program. The bill then creates a private right of action against a manufacturer for engraving in this exact program integrity. Manufacturers need to be able to verify whether a claim is a 340B claim or eligible for a rebate in order to avoid diversion. Okay, oh, there we go. And in Minnesota is one of the few states that has analyzed 340B data. 1 in 10 federal grantees, which are the clinics, reported net losses due to excessive fees from third-party administrators and contract pharmacies. And the most vulnerable providers, like our critical access hospitals, lost over half their 340B revenue to these middlemen. And we understand the sponsor's goal is to protect critical safety net providers, but H.266 would lock in a model that enriches the very middlemen that are draining the program while furthering straining the providers and patients that this program was really meant to serve. So as I mentioned previously, as these arrangements grow, commercial rebates to insurers are shrinking. And according to a study done by IQVIA, private employers in Vermont lost $43.9 million, and public employers are losing $7.7 million in commercial rebates due to 340B participation. So, and if H.266 passes, an additional $20.8 million annually could be lost in rebates. And these losses directly translate into higher premiums. I wanted to include this slide just to highlight to the committee that despite some claims, brand medicines are not the main contributor to rising healthcare expenses. In fact, net prices for protected brand medicines are expected to decline by 1 to 4% annually through 2028, with net prices averaging 53% lower than the list prices due to negotiated discounts and rebates. And just to give insight into the market. So before Vermont expands unlimited contract pharmacy arrangements, many of which are out of state, I think it's really critical to understand this program and how it's impacting the state's healthcare system. There are nearly twice as many out-of-state 340B pharmacy relationships as in-state. Is that revenue leaving the state? Who's profiting? What is the impact to Vermont premiums? The state should want to know where those dollars are flowing and how it affects Vermont's patients, employers, and premiums. North Carolina and Minnesota have identified concerning trends in the 340B program that are increasing costs to Medicaid as well as public and private employers. This fact-finding should really be done before locking in unlimited contract pharmacy arrangements here in Vermont. Again, thank you so much for your time today, and I'm happy to answer any questions.
Thank you. That's very helpful. I'll look at the committee if they have questions, but I do have a question. Frequently hear about middle people in the drug purchasing process, and what about, how does that work? I mean, can we eliminate in any way the middle purchasing process and going to wholesalers? We hear that from our pharmacy folks.
Yeah, it's a great question, and I think it's going to be a really big lift to figure out a way to do that. But I think that, if we all come to the table together, we could actually come to solutions and have better ideas of how to get them out of the middle. Yeah, it's a challenge.
It's a tough one. I get it. Thank you. Questions, committee? No questions at this point, but Morgan, honestly, we may come back to you at some point, and appreciate your time.
Happy to do it. Thank you for your time.
All right, thank you. And thank you for all the information. We have it all on our webpage. There are several different things you've given us. We have that. So thank you.
Thank you.
All right. So we're going to move to the new person. Sarah, teach out this here.
Thank you.
Thank you.
With Blue Cross and Blue Shield of Vermont, and I'm not really great at doing two things, so I'm going to try and.
All right, well, take your time and get it
run
there, and we're fine.
The slideshow. I think I'd like to just tell you our position up front is we would like you to add the additional transparency sections of this bill that the Healthcare Advocates Office put forward earlier in the week.
Okay.
We think that the transparency is one of the most important pieces here. I think because of the complexity of the 340B program and all of the concerns about who's truly profiting and who is paying for the drugs that run through this program. So my perspective is a little bit different than what you heard. Blue Cross and Blue Shield of Vermont is concerned about two particular pieces that are not always addressed in this bill. One is we are losing rebates from drug manufacturers for scripts that are being filled through the 340B program, and we've seen a dramatic increase in that. So just to cut straight to it, we believe that last year, Blue Cross and Blue Shield of Vermont members lost $12.6 million in rebates due to shifting of drugs through 340B. So the rebates come to Blue Cross and Blue Shield of Vermont, and then we use those to lower member premiums. So member premiums are $12.6 million higher because of this. The second thing that happens is that we pay higher prices for drugs that are filled through 340B pharmacies, specifically on hospitals, than we do either through our own Optum PBM relationship or through non-hospital pharmacies. So now I'm gonna try and share. Sure. So here it is, and this is the slide I really wanted to share with you. It's this is from the RAND report about hospital price data. And this was one piece of the report on why costs in Vermont hospitals are so high. And Vermont is the far right end bar of this screen. So average, and this is looking at commercial drug prices in hospitals by state. And Vermont, average prices in Vermont hospitals are more than 5 times the average sales price, and Vermont is an extreme outlier. So
Let me ask a question about that. That's pretty outstanding.
it's dramatic.
Yeah, well, it is. But was there any, I don't remember the RAND report right there, but was there anything about the types of drugs that we have in hospitals versus other issued by other pharmacies? I mean, it could be, you've got the higher cost cancer and
This is definitely infused drugs.
yeah, it's infusions. Okay.
Yeah.
Are these all infusion?
So I called RAND and tried to get
That
real down data, because I love data, as you all know. And they were not able to provide that, although they have for other states in this chart, they have more detailed data, but they would not share it with me. I think because our data set is so small.
Yeah. All right, good.
And so then I'll move to the next. I'm going to try and move as quickly as the witness ahead of me. She was very efficient. So this is information about what we see, and Blue Cross and Blue Shield of Vermont believes is driving that number in the chart, because I wasn't able to get the information directly from RAND. So it's really concentrated at the University of Vermont Medical Center. And we look at the markup from average sales price, because if you recall, Vermont already has in statute a prohibition of sharing with the PBM whether or not a drug that's filled is filled through a 340B program. Okay, so the Vermont Medicaid program can see it, Medicare can see it, health insurers are prohibited. So that's a lack of transparency in the system that's problematic. So we are kind of drilling down on the issue by looking at data enterprise. So these are the drugs with the highest percent markup from average sales price that Blue Cross and Blue Shield of Vermont pays for our members. I won't go through them all, but Inflectra is one example. It's an anti-inflammatory drug. We are paying 1,550% of the average sales price for this particular drug at the University of Vermont. And there's other examples. This drills down a little bit more on 2 different drugs that we pay for. One's Remicade and the other's Keytruda. Anti-inflammatory with the hyphen in the wrong place. Apologies, I couldn't fix it. And a cancer drug. So the other thing that we're able to do is we asked the Blue Cross and Blue Shield of Vermont system for information about what we're paying as a health plan versus other Blues plans across the country. And that's where this information is on the right. So we pay on average $32 more per member per month for injections and infused drugs administered in hospitals than other Blues plans across the country. So the prices are higher and they're growing faster in Vermont than any other state. So $5 per member per month faster than any other state in the country. And some of this is because of the different laws passed by this legislature in different areas of the drug programs that are all interacting with each other, but you're not looking at them in a big picture. You're looking at 340B, then you look at white bagging, then you look at PBMs, and you pass all of these pieces of legislation.
And we sent the Green Mountain Care Board in charge to have an advisory committee so that we could get around that problem.
And I
We
spent
haven't
some time on that
We
committee.
haven't heard
Yeah.
back from them yet.
Oh, there was one earlier. today.
Yeah.
So anyway, what I'm trying to do is really point out that we have an extreme cost problem in Vermont with services and drugs provided in hospitals. And I think back to, it was probably a really long time ago, Senator Cummings, when Vermont was a leader in lowering drug prices for Vermonters. We passed, I think, one of the first generic substitution bills in the country. We worked hard as a state to lower drug prices, and things have gone in the wrong direction when we're in the place we are on that chart. So just to give you a couple more examples, because I know you don't have a lot of time, this is the other thing that's happening. So Remicade is another one of these drugs that we're concerned about. So the cost of Remicade has actually dropped over time, the average sales price. So from January 17, we looked at the first of every year, the cost of Remicade has dropped through January 1st of 2024, but we are paying more for our members for Remicade, which means the margin, the amount that the hospital gets to retain, is growing, even though the price of the drug is going down. So typically we can tell our members and all Vermonters when drug prices drop, we can pass that on to you, but we're not able to do it in this instance because of what's happening with 340B. And I think the last point here is that what we've seen is the prices of drugs in hospitals, and specifically the University of Vermont Medical Center hospitals, has grown at the rate of the Green Mountain Care Board budget approval increases. So Remicade's price increase was 56% of its time period, and the Green Mountain Care Board budget growth was 52%. And then I won't get into the very last slide, but this one is where I say that our members lost 12.6 million on rebates because of 340B. And then if we had been able to obtain these drugs through our PBM, and we know that PBMs are making a profit on these drugs as well, instead of paying the hospital price for the University of Vermont Medical Center system of system of hospitals, so this is all of their hospitals, we would have saved $41.8 million for our members. So they're paying that above what a PBM price would be. And of this, okay, so that was all the hospitals, the 41.8 million, and 33 of it is UVMHM hospitals. So I guess I know that you're hearing that FQHCs and other hospitals need this bill to protect their revenue streams, but this program is skewed substantially towards UVMHM, and they're the ones that are benefiting the most in the revenue gains from the 340B program. And the commercial payers pay the highest prices for all of these drugs.
Okay.
So I won't go on. I'm happy to
No,
answer
we get it. So what we've done is you've called out 340B drugs at the medical center and demonstrated higher costs there. Not all drugs, but that cohort.
Yes, the 50 highest priced drugs.
Right. Okay. Which is exactly what we need to have our pharmacy advisor, our pharmaceutical advisory committee, our drug advisory committee at Green Mountain Care Board working on. We asked them to do one thing, and now the next step might be to be continuing an evaluation, not necessarily specific drugs, but
So
I
I
get
think
it.
that committee needs transparent information about drug prices and drug profits across the system in order to
Got it.
make good recommendations to the
we
states.
all need that. I have to tell you, getting into drug pricing is like the Byzantine pathway somewhere. What was that movie with Bowie? David Bowie.
Oh, yeah.
Right, that's what we're in, right in the middle of that. what was it called?
Labyrinth.
The labyrinth. We're
Right.
in the pharmaceutical labyrinth, and when you look at the chart, I see your hand, Senator, you can put it down. When you look at the chart of pricing where PBMs are involved, it is Byzantine, there's no question, it's labyrinthian. So,
But it's Byzantine everywhere.
right,
I'm getting tired of seeing Vermont be the one spike in so many things.
so I'm going to ask, because we've got one more thing to do, but I'm gonna let Senator Douglas ask his question, and then we're gonna
They're in the hall.
hear from folks around the hallway.
Thank you, Madam Chair.
Yeah.
You had on your, I think your last slide, there your 50 highest priced drugs.
Mhm.
Because that was a lot of savings you put there, but for other drugs, we might send in that list. And if you know a couple,
Were they were all in the previous slide or not?
They're the ones, they include the ones in the previous slide, but certainly it's a longer list. I can share the list with you. I will say that we have to report both to the Green Mountain Care Board and the AG's office, the highest priced drugs that we pay for our members, as well as the
Right.
largest percent increase. And so we have a pretty comprehensive reporting and transparency. So I'm happy to do that.
thank you.
One of the things that we did when we passed that bill to send the message to the AG's office was to ask for the price, but we don't do anything else. It's really difficult for us to reach in and do something else. So the resolution is to try and get some drug pricing committee in place or commission in place as we have. So this is the middle of, we're in the middle of the maze. Yes, so, thank you.
Thank you.
Yeah. Do you mind opening the door and?
I'm very good at opening.
We did a door person. We're gonna move on. Then the folks who are here visiting with us. We skipped over 218, fortunately, with fact. For fertility awareness day, and I see.
Thank you.
Thank you. Hello, come on in.
Thank you so
We're
much.
running late. We're on our.
I'll be
usual-
very short.
This is great. Well, we're thrilled to have
Well,
you here.
thank you so
And
much.
you must be thrilled.
I am. Kate.
Well, then
Yes,
LeBlanc.
that is me.
Well,
Thank
we're
you
glad
so
you're
much.
here.
But I'm gonna be brief, and so hopefully that'll help if you're already feeling a little bit behind.
Welcome, everyone.
These are my friends.
Thanks for being here.
Thank you for having me. So, I'll
So-
start if you want.
So we are the Senate Health and Welfare
Yes.
Committee, and we will not introduce ourselves, but we would like to do that at some point.
Sounds
Go
great.
right ahead and introduce.
Thank you so much. So good morning, almost afternoon, Chair Lyons and members of the Senate Health and Welfare Committee. My name is Kate Weldon LeBlanc, as you said. I'm the executive director of a nonprofit called All Paths Family Building. We are an independent New England-based nonprofit that provides emotional support, educational resources, and advocacy for anyone that's struggling with fertility and family building. And I'm testifying today to help you be aware of House Bill 302, which we strongly support. It's an act relating to health insurance and Medicaid coverage for fertility-related services. This bill would require private and public insurance in Vermont to provide coverage for fertility treatment, diagnostic care, and medically necessary fertility preservation. I really appreciate this opportunity to speak to you about this pro-family legislation. I'm proud to be joined this morning by medical providers. And there were others who wanted to be here, but they are actually providing care today, which we really appreciate. Families, advocacy partners, and most importantly, today we have many Vermonters here who desperately need access to fertility health care to try to achieve their dream of parenthood. So we know that House Bill 302 is not advancing this year, but we wanted to be here today to respectfully ask that you do take it up next year. I hope you'll remember my words. I hope you'll remember us next year. This bill will improve access to fertility care for all Vermonters hoping to achieve the family of their dreams. For those that want to be parents, it is one of the most fundamental human desires. For those of you that are parents, I just ask you to just think for a moment about how I think it is the most important part of our life if you are parents. And imagine if you were told you need fertility treatment to even try to achieve your dream of parenthood, but you can't afford to do it without insurance coverage. And unfortunately, those are the stories I hear all the time in this job, and we heard them today here in the State House. It's estimated that 1 in every 6 people will go through infertility. I have been the 1 in 6. My husband Joe and I struggled for years to become parents, which was our deepest goal that we wanted. We ultimately did do IVF. We live in Massachusetts, so we had health insurance coverage. Even with health insurance coverage, it was one of the hardest emotional experiences we've ever gone through, individually and as a couple. But we fortunately did not have the financial worry. And so knowing how much the financial worry adds to the emotional struggle has made both of us very passionate advocates. And I've made it my job now too. He hasn't, but we're both very passionate about the lack of access. So through IVF, we did have our one daughter who I think is she's 17.
We're glad you're here.
Yeah, she's 17 now. And so I wanted her to come here today. We actually were here. She was younger. We advocated for the Vermont Parentage Act also. And she came with me in front of judiciary, but she doesn't remember that. She'll remember today for sure. So the lack of fertility insurance access also puts Vermont at a competitive disadvantage with your surrounding states in terms of attracting and retaining young residents who want to grow their family in the Green Mountain State. I know you all know this as legislators, but others may not, that, as you know, Vermont has one of the oldest populations in the nation.
Oh, yeah.
With only Maine and New Hampshire having older. And unfortunately, Vermont is the last state in the whole Northeast to pass a fertility insurance law. Every other New England state, as well as New York and New Jersey, have one. Without it, the majority of Vermonters do not have access to coverage for fertility health care. An exception to this is that state employees in Vermont do have some fertility coverage, but most others do not. Some New England states have had fertility insurance laws for decades. Massachusetts was one of the first in the nation, but others have been quite recent. New Hampshire passed their law with broad bipartisan support signed by a Republican governor in 2019. Maine passed their law in 2022. The advantage to Vermont passing a bill later is that we have the benefit of learning from those other states' experiences and trying to advance the best possible legislation for Vermont. For example, we can now ensure that these bills are inclusive of the LGBTQIA community right from the start, as we did in Maine, rather than other states, including Massachusetts, are trying retroactively to make them inclusive. It's much easier to get it right the first time. Another example is that some couples need IVF not because they're having trouble conceiving, but because they want to do genetic screening to prevent grave health conditions in their babies. People in this situation are left out of many definitions of infertility in some states, but they are reflected in the language of House Bill 302. We heard devastating testimony when we were advocating in Maine from a couple who knew they were carriers for cystic fibrosis, but could not afford to pay out of pocket for IVF and the genetic testing. So they tried to conceive on their own because the odds were in their favor. They had, I think, a 20% chance of passing the cystic fibrosis on to their child. And unfortunately, their baby was born with cystic fibrosis. So that young person will deal with this life-limiting condition for their whole life, hopefully a long, wonderful life, but a difficult one. And the families have incredible guilt from having made this choice that really wasn't a full choice. And then health insurers will pay for that child's care for their whole, again, hopefully long life. So we have learned to be very specific in the language of this bill about what is and what is not covered. I want to assure you this is not unlimited coverage without guardrails. There are limits built into this bill that align with other states, and they're not arbitrary. They're grounded in medical guidance. We also know that if you're imposing limits, there may be people who need IVF to have more than one child. We wanted that flexibility that, for many people, their dream is to have 2 children. That we were not able to do that, and I know others have unfortunately not been successful with that, but you shouldn't be limited in the ability to try to have the family that you envision. I also just want to highlight an important aspect of House Bill 302, medically necessary fertility preservation, which fertility preservation enables patients to protect their future ability to have biological children while they're dealing with a diagnosis or treatment that might impair their fertility, like cancer.
I'm gonna ask if you can wrap up.
Oh, sure. Yes, I'm
testimony,
almost done.
and if you can send it to
Yes,
us.
for sure. And I did,
Good.
send a letter,
You
yeah.
did, you got
Yeah,
it.
so I'll be very short. So that really impacts cancer patients who need fertility preservation to be parents in the future. And Vermont has been such a leader in reproductive health care, for which we are so grateful. But this legislation gives you a chance to be a leader again. So thank you.
Well, you did it perfectly then. Thank you. And I would, what I would like is to have the folks you brought with you introduce themselves to
Oh, that
us
would be great.
and where you're from. That would be helpful.
That would be great.
Hi, my name is Claire Kelly. I'm the Chief Operating Officer at Northeastern Reproductive Medicine, which is a fertility clinic in Colchester. I know many of you, but Jolie Fischette, I am the All Pass Family Building lobbyist. So if you have any questions, please
We
reach
will.
out.
My name is Cindy O'Hara. I live in Burlington, and I am a former IVF patient, and I have a lot of perspective on the state insurance plan as well as the private plans, and I'm a strong advocate for everybody having the opportunities that I had.
We'll get you in to testify when we get the bill over here. Great.
Teresa Luber, Business Operations Manager for Northeastern Reproductive Medicine, same as Claire in Colchester. Cassie French, I'm a nurse. I work at Northeastern Reproductive Medicine in Colchester. Been a fertility nurse for about 7 years and feel very passionate about it and hope get
Clean out the whole office.
Yeah, I know. No one's left. There's one doctor working alone now. And she's on our All Pass board also.
Yes,
We
and I'm on the
love
board.
having Cassie on our board also.
My name is Sophie LeBlanc. We live in Malden, Massachusetts. I'm a senior in high school and I'm her daughter. I'm just really glad to be here. It's been a great experience. And
Glad you're here.
My name is Meg York. I am with Family Equality, which is the national LGBTQ plus family advocacy organization. I'm also a Vermonter. I live here in Montpelier. I have 3 kids through assisted reproduction. And one of the reasons that personally I support this is because when we were looking to have our children and asked for advice, they told us, move to Massachusetts. I don't want families leaving Vermont because they can't grow their families
You
here.
got it.
You all know me.
Oh, we do.
Planned Parenthood, but I'm part of this coalition as well. 'Cause
Excellent.
it's
Yeah,
important.
this
Yeah.
is terrific. Thank you all
Thank
for
you.
being with us today. This is great. We've had a very tough morning and you are helping us.
Good.
all right, we want
She
that.
got to play hooky today.
I think she's a senior